Welcome everyone. Today's session is about Heikin Ashi. So we're gonna go through Heikin Ashi and how scalpers can apply it in their daily setup, in their daily strategy. Before we start, as usual, I need to go through the disclaimer warning. Please let me know if you face any audio or visual issues. I will try to resolve it in on spot. So I would really appreciate, firstly, feedback regarding the audio. Now, until I have a feedback from you, I will go through, as usual, the disclaimer. So this material is provided in general marketing communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing investment advice, sorry, or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk, for which these users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as Forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risk involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. So, let me check our question box just to make sure that everyone is here with me. So, let's move on. As I already mentioned, it's all about Heikin Ashi today. Feel free to contact us at webinars@hfm.com. We'll try to help you as much as we can with anything you need. So yeah, let's start. That's me. And let's start. Firstly, we're gonna go through a bit of the background of Heikin Ashi charting, how you can set them on your platform, both MT4 and MT5. Just to clarify at this point, guys, that for MT4 you will need the premium trader tools. For MT5, if I'm not mistaken, is available by default, but we're gonna see everything in a bit. Also, how you can read them, because this is the most important part of it, right? To be able to interpret it in order to take a trading decision. And how important is to monitor the body and the wick of the Heikin Ashi candle. They look like very, very similar actually to the candlesticks, the usual candlesticks, the Japanese candlesticks. However, they have a different interpretation. Also, we're gonna go through two very, very, very simple trading signals. Feel free to ask anything, absolutely anything you want. So, what are the Heikin Ashi candlesticks, first of all? So, Heikin Ashi candles, guys, is just a different way of demonstrating or displaying, if you prefer, the data. So it's, let's say we can call them that they are a bit smooth candlesticks, okay? You know that Japanese candlesticks are one of the oldest forms of technical indicators, right? And widely used. I'm not sure whether I should dare say 90 9% of the traders are using it. I think it's too much, but yeah, widely used. Either if someone is a scalper, intraday trader, long-term trader, stock trader, etc. So, however, the Japanese candlesticks is just one type of candlesticks, okay? Which, as you already know, presents the price movements with the candlesticks. You can identify patterns, and each candlestick represents a single trading session. Now, with this specific form of candlestick, which is the Heikin Ashi one, we have some small difference from the traditional Japanese candlesticks. So first of all, just to highlight that Heikin Ashi, okay, means average. So Heikin means average. Ashi means bar, so average bar. That's why I said initially that is a bit, it's a smoother version of the Japanese candlestick. So basically, the ability that the Heikin Ashi candles have is to smooth out the volatility of the asset. Okay, so the difference between the traditional Japanese candlestick chart is that they incorporate some data from the previous session to show actually the average value changes over time. So the purpose of Heikin Ashi, of the creation of the Heikin Ashi initially, is to see past the choppiness and volatility that is so common in the market, to smooth out the volatility. Simple as that, right? Obviously, like every single other indicator, there is a mathematical formula behind the calculation of Heikin Ashi. And with the Heikin Ashi, we can derive a clear picture of whether or not the market is in a bullish or bearish trend. So it's a combination. I'm not sure whether I put on the formula. I think I haven't. Yeah, I think I haven't. But as I said, it means average bar. Okay. So it's a weighted candlestick. So instead of having open, close, high, and low prices, we have actually, sorry, just we still have, let's say, high. We still have high, low, open, and close, but they are based on the average value. Okay, so unlike with the traditional Japanese candlesticks, which we use the actual open high, open close price to form the body of the candle. Let me just, right? This is the traditional one. This is the Heikin Ashi one. It looks very, very similar, but in the actual candlestick, we have the open, high, low, and close price from the current and previous trading session, while in the Heikin Ashi, we use the outright open and close price to form the body of the candle, and high and low as the shadows or the wicks. So basically, by using this different formula, let's say, the result is that each Heikin Ashi is lined up with the middle of the presetting bar. So look at this one, for example. So if you see the Heikin Ashi candle, this one is lined up with the middle, right? Middle of the preceding bar. Let me just also, I think that's a much better. Yeah, again, the same. The bar, right, is lined up with the middle of the preceding bar, not with the level of the previous candle. Okay. So basically, as I said earlier, the open price used in a Heikin Ashi candle is based on the average of the open and close. Let me zoom in a bit. Here you go. So basically, with the Heikin Ashi, the open price, okay, let's take this one for example, the open price is based on the average of the open and the close from the previous candlestick, while the close is an average of the open, high, low, low, and close of the same candle. I mean, of the current candle as such. So can you understand the difference? So for the open price, we're taking the average of the open and close of the previous candle. Now, for the closure of the existing candle, of the current candle, the candle that it was live, let's say, was running, we're taking the values of the current session. So the open, the low, and the open, high, low, and close of the current period, rather than just the closing price. So the high on the candle wick is the highest number out of the session open, intraday high, or close. The same stands for the lower wick. So in this case that we have a bearish candle, the lower on the wick is the lowest number of the session low, open, and close. You don't need to remember all of this, okay? You don't need to. Just have in mind that Heikin Ashi creates a smooth looking candlestick chart that makes it easier to identify and follow a price trend. Now let me zoom out a bit. Invented back in the 1700s from Munehisa Homa, Japanese rights trader. But yeah, let's ignore a bit the history behind Heikin Ashi, and let's focus on what this means for you guys as traders and how it could be useful for you as traders. The way of reading the Heikin Ashi is very, very simple. It might be even simpler than the actual traditional Japanese candlesticks, okay? Because the fact that it smooths out the volatility, okay, is very, very good tool for trending markets. Because if the candles don't have a wick, that suggests a strong trend, okay? If they have a wick, that implies that something is changing and we might see a reversal. I'm going to explain later on with some live examples. But have in mind that if you don't have an upper wick, then that suggests suggest a bearish market. So short, it looks to be short. If you have no lower wick, that suggests that you should look to be long, so bullish market. Very, very briefly, okay? This is a very, very briefly then to very, very briefly understand the how to read the Heikin Ashi, but we're gonna see right now everything. So, so it's very useful for trend traders, right? And for anyone that in his strategy, the aim is to identify the start of a major price trend or any trend reversal. Then if you this kind of trader, you should consider it in your setup. So this is especially useful if you're trading the news, because during periods of high volatility, when it can be easy to lose sight of long-term movements, Heikin Ashi, the fact that they smooth out and they filter out the noise, is what makes them useful either for short-term traders or long-term traders, as long as if there is if we are in a period of high volatility. So also, guys, you can use the chart to identify when to open or hold a trading position. Also, when to exit ahead of a reversal or heavy losses on your investments and etc. So you might not use it as such for spotting a trade, but you can use it to time your entry, to spot when you want to exit, to spot how long you want to hold that particular position. Okay, so the good thing about it is that it can be applied anytime, hourly, daily, monthly, and etc. etc. Okay, it's very, it might be the more a very, very reliable indicator. Okay, yeah, so let's move on. Let's focus a bit on how to interpret it. We have went through we have already went through the meaning, the high, the low, the open, the close, but let me just very, very quickly go through them again. So the Heikin Ashi close is calculated by the average price of the current bar, right? Open, high, low, and close. The open price is the mid of the previous Heikin Ashi bar, okay, of the previous sessions, not the current session, the previous sessions, session Heikin Ashi bar. The high is the highest value in the set, and the low is the lowest value in the set. So, okay. Usually, you will see them in green and red, or white and red if you're using a black background. If you're using a white background, you're going to see them usually in green and red. Obviously, you can change the colors as you wish. Just this is the default setting that there is in MT4 and MT5. So the Heikin Ashi in a green body with no lower wicks like this one, okay, there's no lower wick, that suggests and represents a strong uptrend, a strong bullish trend. The Heikin Ashi in green again, but with both upwards and low, higher and lower wick, suggests that the momentum has changed. Okay, the upwards momentum is likely to decrease, so that implies a possible reversal. So in this case, if you see something like that, okay, and in general, even if the body is not small, okay, like this one, still it's still the concern whether the momentum has changed. Okay, so you need to be careful if you see a lower and up and a higher wick. because if you have taken a bullish, a long position, a candle like this one that it has two wicks, implies that it might be time to exit your long trade. It might trigger an exit point for buyers. But the most reliable, let's say, shape is when you have a small body and large wicks. Okay, because if you have, like here, can you see it? No, you can't. Why? Let me put the laser one over here. So if you see like that, which it has a big body but still long wicks, this raises the question whether we won't have we don't have a strong uptrend, but because the body is still big, it's just raising a question, raising a concern. It's not like clear. This one, the fact that it's small, okay, that is even choppy, it clearly states that the bulls have lost the control. Okay, so in an uptrend like this one, okay, Heikin Ashi will show you a progression of green candlesticks with no tail, no tail. That's a very, very tiny, you can ignore that one. No tail, no wick, a lower wick. While in a downtrend, there is no upper wick. Okay, and it's typically in red, as I mentioned. So here is the exact opposite example, exact opposite meaning of Heikin Ashi. So you see, no wick, no wick, no upper wick, no upper wick, no upper wick. That indicates a really strong downtrend until we have some choppiness, until we have some small body Heikin Ashi with really large wicks. So the very first signal was that one. Then some further pressure has been seen. The very next one was completely choppy, indicating that we should consider exiting the trade. Some exits could be taken also over here, because simply it means that the bearish momentum has declined, that bulls have started entering, let's say, the market. Okay, clear. Large body candle, no lower wick is long. It gives you a long signal. A large body candle, no upper wick is a short signal. Small body candles with upper and lower wicks suggest reversal, possible trend change. It's a nice exit level as well, while you can wait for the very next candle in order to confirm that exit or that entry if you're thinking of entering the market. So here is so first signal, right? Then it was change. Second signal, okay, so we knew that there is a trend change, right? The next one, it was the confirmation because it's white, still with big wicks, but is white, okay? So you can wait for confirmation either to exit your existing short trade or to consider opening a long position. By the way, guys, let me just we went through all this. Just to clarify at this point, that with the same way that you're using the actual Japanese candlesticks, you can use also the Heikin Ashi. So what I mean, if you are placing some trend lines, some support and resistance levels in your actual charts, feel free to use, again, support resistance levels, trend lines into your Heikin Ashi charts. Patterns, again, in addition to the candles, you can, if you have spot, if with the use of Heikin Ashi, you have spotted the pattern, still, I mean, treat them like the traditional Japanese candlesticks. Okay, you might see a descending triangle, you might see an ascending triangle, you might see a symmetrical triangle with the Heikin Ashi. So it's the same exact way. Use them. You can actually, with Heikin Ashi, you can still spot some important patterns. It's the same thing, okay? If, for example, do I have a pattern anywhere over here? Okay, okay, there is not this example, but no patterns, but I think you get the meaning. So if we have an upwards break of a triangle, then that's a bullish signal, right? So indicates that the uptrend could continue. So treat them, combine them with patterns if you spot a pattern, obviously, not trying to invent a pattern if it's not there. Now, so make sure that you have a couple of candles, let's say, for example, for this downtrend, okay, that we have the signal of a reversal here. We had a really bearish candle over here. So make sure that you're waiting for a confirmation with one more candle at least, okay? You need to have a couple of long body candles with no wick at the top in order to suggest that there is a strong trend to the downside that will continue for quite some time. Yeah, I think we covered all these. So the more candles you see without a wick, the stronger the trend is, the more it will last, the more likely the trend to continue, okay? Okay. So remember what I said earlier, that we're gonna have a signal, okay, with a small body candle or a wick or two wicks, so sorry, both high and low wick in the same candle, which is the very first prime signal that something is changing in the momentum, but we need to always wait for confirmation. And a very good example about something like that, why you need a confirmation, is this brilliant Swiss yen for our chart. Because you see, the very first signal came here actually. Okay, the next one was bullish, so we were okay, that's fine, it was a false alarm, all good, we continue. The very next three were still bullish, still white, so still bullish, but still with lower and upper wicks. So that raised questions. Is it gonna continue to the upside? Is it gonna reverse? So raise again the concerns. The very next ones, though, are bullish, 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 and then we had a consecutive choppy candles or candles with 2 weeks, both lower and upper wick, but without the change in the color. They didn't became red. So that gives the reassurance, the fact that the color hasn't changed. It gives the reassurance that we still have some time. There is still some upwards space to be covered, right? The confirmation will come with the change of the color as well. So both, so to have a change in the color and candles that have lower and upper wick. Okay, so that was when the confirmation came here. In this one, if you weren't sure, you could wait for the following one. Okay. And don't be afraid when you see suddenly, let's say we have a downtrend, right? We see suddenly a change of color. Don't be afraid, because it's a very small body one, and it doesn't necessarily mean something. It might be just maybe just because of the volatility or something, or some short-lived price action, etc. So it doesn't mean anything. Even if you see two consecutive ones, but not strong ones, still doesn't mean that the trend is changing. Because look at that. Indeed, they are bullish, but small body ones with both wicks, upper and lower wicks. So still it means nothing. Remember that we need to have confirmation about the change of the trend will come only if we see a strong candle with no wicks. So if over here we had a bullish one, so white with no wick at the bottom, yes, that would be when you have to consider exiting the downtrend. But still, we don't get something like that, then please ignore these short-lived bounces, okay? Because it's just corrections of probably an oversold condition, okay? Wait for confirmation. Look at that. Change, but choppy, doji. The next one, they had any tail at the bottom, but quickly change. So because we have corrections in the market, right? If we are in extreme level, if the asset is considered to be overbought or oversold, we need some correction. Be careful to be able to interpret whether this is just a confirmation, sorry, a correction or not. So be patient. Wait for confirmation. Again, into the upside, that was indeed a correction of the overbought condition. Okay, that one, so doji, bullish, and again doji but red, mixed, doji but with both tails. So yeah, that was also correction, So be patient with these premature signals, because they might be just corrections. Yeah, so more examples of it here. Over here, as you can see, is a 5-minute chart. Okay, 5-minute chart. Because I wanted just to show you that it could be applied even in a 5-minute chart, okay? But you need to be a bit faster, as you understand, in a 5-minute chart. Avoid early decisions, premature decisions. Make sure that you have consecutive strong candles. 1, 2, go. Right? So avoid exiting or taking a decision if you see doji candles with big wicks. Okay. Yeah. Here is another version in white and green. Just to stop at that point to show you in the MT5 what's going on, because okay, ask about the MT5. Let me open my MT5. Here we are. What did you ask? Sorry, highlight is different indicator, or we just spot it in our normal indicator? No, it's not a different indicator. Heikin Ashi is Heikin Ashi. There is nothing. No, here it is. In in the, you can change the colors, by the way, you can change the colors. You can, if you want to see it only in a particular time frame, feel free. If you want to have it in all time frames, still feel free. So yeah, no, it's the usual Heikin Ashi. There's nothing different between HFM up or MT4 or MT5. Heikin Ashi is Heikin Ashi. Okay, so in the MT5, it's by default. Okay, it's by default on the MT5 under the panels over here. Okay, in MT4, by the way, here is MT5. Okay, it's by default. You have MT5 offers it by default. If you have an MT4, you need to download our premium traders tools, and we offer it over there for free. Yeah, so let's go back to our charts. You can see over here that also 1 hour chart. So the very first sign that we might have the beginning of an uptrend, dodgy one. So raise questions whether it will indeed see an uptrend or whether we're gonna see a downtrend, so some consolidation over here, some indecision, and the confirmation came with the third candle, which was clear that we are at the beginning of an uptrend. So if anyone has spotted from you this candle could have already opened a long position. And as I said earlier, don't be mistaken by these early signals. These are just corrections because the asset was probably overbought. Still wide, okay? The following one was still wide. The next following one was still wide. The next following one was still wide and with no tail at the bottom. The following one was still wide but choppy. And here is when you should consider exiting the trade. This is the exit point. Okay. Okay, I'm not saying that you should avoid exiting earlier. I mean, if you have benefit all this move, it's fine if you have an exit over here, but better to wait for another confirmation because you might have entered too early and you might face a really strong uptrend that will last for a while. Okay. A lot of examples, even 1 minute chart. You can see how fast the 1 minute chart is. So for the 1 minute chart, you can not really wait for confirmation. It's too fast. So you need to act fast. Okay. So the 1 minute chart or even 5 minutes chart requires really small position and fast position. So I mean, you might keep it for two minutes and that's it, 3 minutes and that's it. I mean, very fast, small positions. Okay. Yeah, at least in the 5 and 1 minute chart, because it's a very fast environment. Now, how you can start trading with Heikin Ashi strategies, right? So, step-by-step guide. First, determine the momentum based on the higher time frame. So, if, for example, you are a 1 hour trade, for example, you need to go higher in the 4 hour and daily chart to see the overall trend, whether there is an overall trend. You just to have in mind whether your decision eventually will be along with the trend or against the trend. Also, if you have spotted pattern, use it. You can use the patterns presented by the price action, like triangles or wedges, pennants, head and shoulder formation, etc., for spotting breakout or for spotting possible continuation of the existing trend. Okay, so it's another indication for confirming your decision. Also, similar with what you're doing in your daily routine, in your, even if you're using the traditional candlesticks, use trend lines, spot support and resistance levels, because even with Heikin Ashi, if that support and resistance level breaks, okay, then it will be, other than the body of the candle, it will be another indication that regarding the direction. Also, if you're not using Heikin Ashi as your sole setup, as your sole strategy, and you have a different setup, you can still use Heikin Ashi just to spot the right time to entry at a lower time frame. Okay, let's assume that you're not using Heikin Ashi in general. You have a different setup, a different strategy. You have spotted that it looks to be an uptrend. I confirm to you that it will continue for a while, and you want to jump into this bullish market, right? But you cannot find when is the right time to enter the trend, right? So you can go in a lower time frame, just one scale down, and with the use of Heikin Ashi, you can spot your entry level, okay, in order to favor the higher time frame momentum as well. Or you can use Heikin Ashi in order to identify stop loss orders to control the risk with this way of your trade. That's a big coin in the 12-hour time frame. Heikin Ashi, we use Heikin Ashi. You see, by connecting the tops and connecting the bottoms, we could see that it's a triangle. By putting a line on the previous highs, we had two resistance levels. So we spotted the breakout of the triangle. So we could easily have target levels, because we have seen, we have done other than we have done our homework. We have spotted possible support resistance levels, right? We will monitor the candles. We could see that there is a shift in the sentiment, right? And this bullish, very first bullish candle came, breaking the triangle, indicating that we might see an uptrend with the target, the next target being at this resistance level over here. Just a second, have I missed anything over here? So after, just first of all, so right, we had two resistance areas, right? Let's move on. It's the same exact example, right? The same exact example. That's the 12-hour chart that we saw earlier, but it was over here on the actual breakout. And that's the 2-hour one. Okay, so the idea, what's the idea? After the momentum has been identified, right? The idea is to look for a continuation in the 12-hour Heikin Ashi. So we have the breakout, right? Right, we have the breakout. So we zoom in into the 2-hour, okay, when we initially saw the breakout, which was, it could act as a nice entry level as well, by the way, right? And we are checking the 2-hour one, which over here, as you can see, the triangle breakout in the 2-hour, it looks like the breakout of a ranging market. So this is the first entry at the break of the triangle. and by monitoring the 2-hour, we could see that it continued to the upside, then it was a bit choppy, moving sideways, and over here we had the nice strong candle breaking another pattern, that's a symmetrical triangle as well, which could be possibly our second entry. So to add on the existing position. So you can use, so from the one hand, you can use the higher time frame, such as the 12-hour over here, in order to look for a continuation. In order to monitor to actually check the overall trend, and by zooming in into lower high time frames such as the 2-hour chart, you could spot your possible entry level, or you can either spot additional levels that you can enter the market in order to add to your existing position. Because these continuations, like this one, can be framed under any continuation pattern, which could be a wedge or a triangle or a ranging market, etc. So from this specific example that I show you over here, we had two possible entries after the breakout of the triangle, right? So you can see them over here. I have spot them over here. And you can consider the body of those patterns, right? Here, the bottom, sorry, of this pattern, the bottom of this pattern as your stop loss, or as your stop loss order, where you will incur with this way your risk. So it is essential, guys, to highlight how important the two resistance levels were, because they could fuel the long positions, right? Act as pivot points at which we might see short sellers to have their stop loss orders, where we could eventually drag our stop losses. So yeah, think about it, okay? More and more examples. That's a very old one. It's just to show you that even with the Heikin Ashi, if you have spotted a pattern, that will give you further confirmation, because as I said earlier, we might have a lot of different, we might see consecutively the candles to change color, to have lower and upper wick, but without giving us a confirmation whether the trend has changed or whether this is just a correction of the existing trend. So by spotting also patterns, this will give you further confirmation of your trading, right? So this is the classic chart, okay? Spotted falling wedge, spotted triangle, the very immediate resistance level over here, resistance level over here, because if we've seen the breakout of this resistance level along with the breakout of the pattern, that will indicate a bullish signal, right? While the same exact, sorry, my bad, that's a Heikin Ashi one. And that's also Heikin Ashi, but a different example. So can you notice over here? So feel free to combine any indicators you want, by the way, okay? So patterns, Fibonacci, something that I forgot to mention. So look at here, we had a pennant, right? Right? We had the very, very immediate resistance level, the latest swing high over here. That's a very immediate resistance level. The next one is the top of the pattern, right? Of the flag, let's say, which was over here. But also, can you notice how this falling channel form as the retraced, how it retraced around the 61.8 Fibonacci level of the prior performance. So this big breakout in late June here, this big breakout, it signals that this is the end of the correction, and we're gonna have the resumption of this uptrend, of this initial uptrend. So feel free to combine indicators that just will strengthen more your decision. What I wanted to show you over here again, latest high, key resistance level, breakout just confirms the continuation of the trend. Yeah. So pros and cons. Obviously, like every single other indicator, there are some advantages and some disadvantages, okay? So there are a lot of advantages and just a single disadvantage, okay? It is widely recognized as a highly reliable analytical tool. The ability to smoother action of the price allows to identify very easily without and fast the trend, to identify trend, clear one, takes out the noise, right? So it gives clarity. Excellent also to spot entry level, exit level, or to there are many ways how the trader could trail the stop loss order. Is available for any time frame and any platform, as you have seen. What else? Yeah, that's pretty much it. Time frames, different platforms, takes out the noise, more reliable patterns exactly because there is a lack of noise, clarity in the identify the trends, trailing the stop loss orders, exit and entry levels, and so on and so forth. Now, there is obviously one limitation, okay? The limitation. So basically, because it's exactly the average value, remember the difference between the traditional and the Heikin Ashi. The difference is it's an average price. By averaging though the values, the candles do not show exact opening and closing price of an asset. Okay, and so it makes it from the one hand easy to identify a trend. It fills in the price gaps. It helps with the entry point and stop loss levels for buying and selling. But these factors can put day traders or scalper at a disadvantage, particularly in a fast-moving market like the Forex market, obviously, by giving signals that have already become obsolete, okay? This is the limitation of the Heikin Ashi. that is giving signals that have already become obsolete. That's why, in order to avoid this disadvantage, this limitation, you should combine it with another technical indicator, just to identify the accuracy of your entry next level. Okay, that's the only limitation. Is those let's say false alarms? Let's say not. Actually, it's not the false alarm. It's basically the fact, because it's filtering out the noise, as I said. Some reversals can be spotted before any signal is given on the Heikin Ashi candles. And the reason is because it's based on the average prices. But that's the only disadvantage, which could easily be overcome by applying at least one extra indicator in your trading strategy. Maybe it could be RSI, it could be moving average, it could be anything you want, basically. Guys, that was pretty much it. Okay, very briefly, some most common mistakes. One of the many mistakes many traders tend to make when using Heikin Ashi, basically, is the lack of multiple time frame analysis. So Heikin Ashi is very useful for multi-time traders. So, and the reason for that, you know, as traders, you are mainly focused on one time frame, that right? Which that time frame could be in the middle of an overall movement, right? That's why initially you need to check the overall trend before you decide, before you go back to your time frame, the time frame that you usually trade in, etc. So if you are this kind of trader that focuses only on a single time frame without at least being aware of the overall trend, okay, that means that when you try to play, let's say, with the trend following approach, it will significantly decrease your chances of profitability. So the best way is to look at higher time frames, just to monitor where the momentum is present, the overall trend. So to have a clue of what's going on in the overall market, and then go down to the lower time frame to either consider taking a position on the continuation of the trend or on the possibility of a reversal. Okay, so usually the momentum played on the higher time frame can be found using the Heikin Ashi strategy. So for example, if you check the triangle example that we have earlier, so do I have, so let's assume that you have, I don't know, a daily, okay, a daily triangle, right? You have a breakout over here. If you zoom down to the 1 hour and check in the 1 hour how this breakout of the triangle looks like, okay, oops, come on, you will then be able to time this breakout. So you can, if you if you decide to go long on that breakout, by going down to the 1 hour chart, you can time how long you will keep this position open. Okay, so the lower time frame could help you time your entry. So remember that trading on the right side of the market can be much easier if you switch from classical candlestick chart to the Heikin Ashi candlestick, or if you combine the two. Overall, the Heikin Ashi versatility is great to spot potential trading opportunities. However, as I said, you need to be to keep an eye on this limitation that I talked about earlier, and just make sure that you practice it before you actually trade using Heikin Ashi. A lot of practice. I'm trying to look the Heikin Ashi indicator MT5, but can't get it. Barak is, I just open all of your, in your navigator, open all of your folders, okay? Okay, obviously I'm in a demo account over here, but in my demo account, I can see it below the very, very bottom. Yeah, the very bottom, which is below the examples for some reason. You see, I open the examples folder, open both canvas and panels, and this Heikin Ashi. Here it is. Can you double check and let me know? Because there are so many available in MT5. You need to go one by one, closer. I think it's with alphabetical order, by the way, so that might help you. But make sure that you open all of your folders, because it will be easier with this way to find it. Yeah. If not, please send me a message, either in socials or I mean socials, I mean HFM socials, because if I'm not here, some of my colleagues can see it. It's over here, along with the Chimoku, below Gador. Okay. So guys, I'm gonna call it a date. We're done. Hopefully you enjoy it. Try it in a demo account. I think you will find it useful, and you can find it a nice addition on your existing strategy. Thank you very much. Have a great day ahead. Have a great week ahead, because it's expected to be a very volatile one. And see you again on Friday with a live analysis, like a monthly wrap-up, let's say. Okay, see you. Thank you. Bye-bye.